Hi, this is Marco Schwartz. Today I am reviewing 7Harvests, a Swiss P2P platform combining consumer, small business, and real estate loans in one marketplace. My short verdict is positive. I like the accessible public entry point, experienced team, transparent structure, and layered approach to protection. Because the platform is still building its public track record, I would begin with a small, diversified allocation, observe several repayments, and complete a withdrawal before increasing it. On the homepage, 7Harvests presents itself as a Swiss-born investment platform offering a simpler route into private lending. The proposition combines consumer, small business, and real estate loans with manual selection and automated investing. The public site currently advertises an entry point from €50, funding is in euros, and it says there are no investor commissions. This review is produced in partnership with 7Harvests, and the tracked platform link is in the YouTube description. So what exactly is 7Harvests? The operator is 7Harvests AG, based in Zug, Switzerland. Investors acquire assigned claims connected to loans arranged through the marketplace, while the platform administers payments and represents investors during collection. It is an intermediary, not a bank or savings account. The service is primarily aimed at Swiss residents, although eligible international investors may also be accepted depending on local rules. This section combines two useful signals. First, the team highlights previous experience at institutions and platforms including SEB, Danske Bank, Barclays, Debitum, Hive5, and Bondora. Second, the public platform figures show zero investor fees, project rates up to 15%, and a minimum from €50. I would confirm the current onboarding threshold before funding, then compare every loan by its base rate, duration, borrower, repayment schedule, and protection structure. Here, 7Harvests explains the protection model behind the headline return. Uninvested client money is described as segregated from operating capital. At loan level, the originator is contractually required to buy back a claim after the borrower is more than 60 days overdue. The platform also advertises a second protection layer supported by its own liquidity. I like that layered structure, while remembering that buyback depends on the financial capacity of the party making the promise. The return structure deserves a clear explanation. The public marketing pages advertise target rates up to 15%. Qualifying investors can receive up to 3% extra through the 7 Circle loyalty program and another 1% through referrals, taking the promotional maximum to 19%. I would always judge a loan using its base rate first and treat bonuses as an extra. The higher figure is conditional, and no advertised return removes credit or liquidity risk. The investment journey is straightforward. Explore available opportunities, invest manually or through automated rules, and receive principal and interest according to the project schedule. Registration includes identity verification, and deposits are made in euros. Each listing should show its own term and repayment schedule before you invest. I would treat active loans as hold-to-maturity investments and only automate after setting strict limits by loan type, country, originator, and maturity. The team page is one of the stronger parts of the story. Founder and chairman Richardas van Zinskas previously co-founded and led Hive5, so he already understands European P2P operations. The wider team lists experience across banking, lending, compliance, and established marketplaces. A relevant background does not guarantee future results, but it reduces the execution risk of a team learning underwriting, payments, servicing, and investor communication for the first time. The main question is time. 7Harvests is a recent public platform, so repayment, recovery, withdrawal, and portfolio statistics are still developing. That does not make the proposition unattractive. It changes how I would size it. The ability to begin with a small amount is useful for a gradual test. I would spread a modest allocation across several loans, record actual cash payments, complete a withdrawal, and only then decide whether the platform deserves a larger position. This benefits section summarizes the practical offer: withdrawals of available cash, Swiss-based governance, no hidden investor fees, automated investing, and exposure across several countries and loan categories. The mix is useful because investors can diversify beyond one borrower type. I would still separate uninvested cash from active loans. Available cash may be withdrawn, while invested capital depends on the contractual repayment schedule and any recovery process if a borrower becomes late. 7Harvests also puts unusual emphasis on visibility. The site names its founder and board, publishes information about its compliance function, links to an audited opening balance sheet, and presents external media references. That financial statement covers the predecessor company before the public platform launch, so it is an early corporate snapshot rather than a platform performance record. Even so, publishing it is a positive transparency signal and gives investors useful material to examine beyond marketing claims. On regulation, precise language matters. According to the current general terms, 7Harvests is supervised by VQF, a FINMA-recognized Swiss self-regulatory organization for anti-money laundering compliance. That is a meaningful compliance framework, but it is not direct prudential supervision by FINMA, deposit insurance, or a guarantee against loan losses. I see the named Swiss company, independent board, AML oversight, and published reporting as positive foundations, while still analyzing every loan and protection promise on its own merits. This page brings the governance structure together: an independent board member, a named AML officer, and an external Swiss auditor that has completed an opening balance sheet audit. Those are concrete accountability measures, especially for a young platform. They do not guarantee returns, but they make the people and processes behind the business easier to examine. For me, that is a clear positive, while the underlying loans still carry borrower, originator, liquidity, and recovery risk. The FAQ covers the questions I would expect before opening an account: what investors can finance, whether company accounts are accepted, expected returns, investor eligibility, the 7-Circle program, and how investments are protected. The platform says exposure can include consumer credit, SME, and real estate loans across different markets. Investors outside Switzerland may be accepted subject to eligibility and local rules, while United States citizens are excluded. The exact terms should always be checked before registration. My final view is that 7Harvests is a strong launch and a platform worth following. I like the accessible public entry point, the combination of 3 loan categories: manual and automated investing, team experience, segregated cash structure, and 2-level buyback approach. I would use it as a small diversifying position alongside established platforms, not as a replacement for emergency savings. The platform link, full review, disclosures, and additional resources are all in the YouTube description. The final call to action is simple. I will leave links in the YouTube description to 7Harvests, my complete written review, and the supporting terms and resources used for this video. The platform link is a tracked, circle-wise affiliate link, so I may earn a commission if you register, at no extra cost to you. Start small, read each project document, and remember that P2P lending can involve delayed repayment or loss of capital.